So I just spent over £105,000 today on my Trading 212 account, and I'm going to explain everything today. You see, I went to bed not knowing that the S&P 500 had, kind of collapsed yesterday. When I woke up, I was, to my disarray, saw that my screen was all red. The S&P 500 down by 2.95%. The VWRL down by 1.87%. Even the Vanguard Germany all cap down by 1.58%. The FTSE 250 and the FTSE 100 down by both about 1.3%. Now, a lot of this stemmed from the fact that the Federal Reserve only cut interest rates by 25 basis points, possibly hinting that, the game of interest rates is not quite over yet. And of course, investors don't like high interest rates. So when I woke up, my favorite S&P 500 holding, the GSPX, was down by around 2.8%. And I thought that was the perfect opportunity to, spend the cash that I've been holding for the past few months. I have regretted my decision to keep a lot of cash. And that wasn't just because I'm trying to time the market. A lot of it was due to, having my ISA transferred from another provider and that just messing up everything. But as you can see today, I have bought £105,800 worth of S&P 500 holdings. You can see already it is up by 0.12%, which is return on investment of £130.66, which is kind of crazy on such a large amount of cash. Now, if you would like to sign up to Trading 212 and receive a free fractional share worth up to £100, you can always use the link in my description box down below. Alternatively, if you signed up to Trading 212 in the past 10 days and haven't received a free share, all you have to do is click the 3 horizontal line menu over here, scroll all the way down until you see the use promo code section, and in this menu enter my code JUBAIR and you should get a free fractional share. Now, of course, if you are new to investing, this dip of around 3% will be very disheartening for you. Let's say if you put in £1,000, seeing 3% of that gone in one day is very hard. But you know what? The entire purpose of investing is expecting that the stock market as a whole is going to go up, although past performance is no indicator for future performance. As you can see, my current Trading 212 ISA portfolio value has exceeded £109,000 for the first time, currently at £109,051. If I had invested yesterday, this portfolio would have been down by £3,000-ish. So I'm actually pretty happy that I got to spend all my cash. I was not going to wait further for a crash to happen or anything like that. I got my money in when I wanted to, and I'm not going to try my luck anytime soon. Now, of course, there is no saying if the stock market from here now onwards is going to go up or down. There could be another 30-40% drop, but I'm very happy with having my money invested rather than just gaining that Trading 212 interest on uninvested cash. Now, you might also see that I have this pie still here, the £100 every day into the FTSE All World. If you've kept up with that series, which I'll actually link to a playlist, you would have known that it's now ended. I invested £100 every single day into the FTSE All World when the stock market was open. Now, even with that 2% dip that we've seen with the All World, I am still up in that portfolio, which I don't deposit anymore, by £47.06. As you can see, even the Invesco FTSE All World today is down by 1.77% as a result of that big hit to the S&P 500. Now, one thing that made it nicer to have cash this whole time, even though I wasn't investing in it, was the fact that Trading 212 was giving out interest on uninvested cash, currently at 4.9% as an annual equivalent rate. Now, of course, do bear in mind that a lot of this money is invested into qualifying money market funds, which is classed as an investment, so capital will be at risk. Now, one other thing that I did yesterday was I spent around £14,000 on the S&P 500 in my Trading 212 Invest account. As you can see here today, it is looking really, really bad. This is my top holding here, the iShares Core S&P 500. So as you can see, we are down by 2.69% today. So I have 1,841 shares in the GSPX. This is outside of my ISA. And as you can see today, we are overall down by 2.38%, or a loss of £444.87. Now, like I said, if you are a new investor and you invested yesterday, I'm really sorry that you're going to be down probably today. As you can see, a £444 loss can be very difficult to stomach. But you know what? The expectation, at least for me, is that the stock market overall as a whole, including the S&P 500, should actually, gain year on year. And that's the hope anyway, as investors, that we take. But always remember that your capital is at risk. Now, in addition to all of that S&P 500 action, I have been investing £10 into the S&P 500 every single day for the past 48 or 49 days. As you can see, yesterday things were looking really good, and of course today we are down quite a bit. So I actually have been investing for 49 days, £10 every single day, but we are still up by £4.08 after all of that time. Just ignore the figure at the bottom. It's been confused with, you know, when I bought the IUSA outside of Pi, so don't worry about that. But of course, the main point of this video is that the stock market goes up and down all the time. You know, it's impossible to time the market correctly every single day. Maybe you'll get it right once or twice, but you know what? No one's actually a genius in the stock market. There are too many variables. Even if you had insider knowledge, there's too many variables in the market overall. But you know, based on past performance, the S&P 500, even after all of its dips, has managed to edge out and create new highs. So make sure to check out some of my other videos, and I'll see you in the next video.